We've reached quarterly Christmas again, and it's the best yet. But we've got some unfortunate news to go along with otherwise massively good news. This is Tesla Tidbits episode number 663 for the week of August 1st, 2021. Another quarter, another set of record profits for Tesla. Ladies and gentlemen, Tesla has achieved a $1 billion quarterly profit for the first time in its history. The full numbers have Tesla earning $11.958 billion in revenue for the quarter, notching a GAAP profit of $1.142 billion. Revenue is up 98% year over year, and profit is up a whopping 998% year over year, though admittedly, that's probably not a sustainable percentage to continue to expect. Tesla also still has a massive cash hoard on hand of $16.2 billion, which has declined 2 quarters straight, but they've also spent nearly $1.5 billion per quarter the last 2 quarters on capital expenditures, i.e., building factories. We'll see this number wind down considerably following the completion of Giga Texas and Giga Berlin. But earnings results are just one of the many highlights for this quarter. Counting down the deck, North America loves its Model 3 and Model Y. The majority of all Model 3 and Model Y production was delivered in North America this quarter. Next up is another interesting shift of Tesla resources. Previously, all exports to other countries were handled at Fremont. Now, Gigafactory Shanghai is the primary vehicle export hub. This is interesting as it could mean more deliveries in North America and shorter lead times for everybody else. There's a quick update for both the new factories as well, and it just boils down to everything being on schedule to begin production this year. Next up, the investor deck puts in print what we've already been told about how Tesla is managing to continue production in the chip shortage, along with a little extra detail. The electrical and firmware engineering teams are, quote, designing, developing, and validating 19 new variants of controllers in response to the ongoing semiconductor shortages, end quote. Adapt and overcome is the name of the game at Tesla. The next bit is probably the most important part of the deck other than the profit, and one might argue potentially more important. This is regarding the development of the 4680 cells at the Cato Road Development Facility. If you listen to nothing else on this show, listen to this quote. Quote, we have successfully validated performance and lifetime of our 4680 cells produced at our Cato facility in California. We are nearing the end of manufacturing validation at Cato. Field quality and yield are at viable levels, and our focus is now on improving the 10% of manufacturing processes that currently bottleneck production output. While substantial progress has been made, we still have work ahead of us before we can achieve volume production. Internal crash testing of our structural pack architecture with a single-piece front casting has been successful, end quote. Hear me now. 4680 production is almost here. The fact that quality and yield are at acceptable levels, and they're working on the final 10% of the production process to smooth things out, means that 4680 cells are almost ready for production vehicles. This is right on time with the start of Giga Berlin and Giga Texas beginning production of Model Y, both of which has been said to be intended to produce vehicles with only structural packs and 4680 cells. Alrighty, enough of that investor deck. Off to the earnings call audio. Of course, we start things off with Elon's opening remarks.
So to recap, Q2 2021 was a record quarter on many levels. We achieved record production, deliveries, and surpassed over $1 billion in GAAP net income for the first time in Tesla history. I'd really like to congratulate everyone at Tesla for an amazing job. This is really an incredible milestone. It also seems that public sentiment towards EVs is at an inflection point. And at this point, I think almost everyone agrees that electric vehicles are the only way forward. Regarding supply chain, while we're making cars at full speed, the global chip shortage situation remains quite serious. For the rest of this year, our growth rate will be determined by the slowest part in our supply chain, which is there are a wide range of chips that are at various times the slowest part in the supply chain. I mean, it's worth noting that if we had everything else, if we had vast numbers of vehicles and cells, we would not be able to make them. If everything except the chips, we wouldn't be able to make them. The chip supply is fundamentally the governing factor on our output. It is difficult for us to say how long this will last because we don't have. This is out of our control essentially. It does seem like it's getting better, but it's hard to predict. So, in fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla. We were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. So it was an incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production. And I'd also like to thank our suppliers who work with us. There've been many calls, midnight, 1 a.m., just with suppliers in resolving a lot of the shortages. So thanks very much to our suppliers. Let's see, in terms of FSD subscription, we were able to launch full self-driving subscription last month, and we expect it to build slowly but then gather a lot of momentum over time. Obviously, we need to have the full self-driving build widely available for it really to take off at a high rate, and we're making a lot of progress there. So, yeah, I think FSD subscription will be a significant factor probably next year.
Well, that wasn't the most heartening intro that Elon's ever given us. It seems that even Tesla may finally succumb to the chip shortage issue, despite all it's done to insulate itself. And there's little doubt that Tesla has navigated this the best of any vehicle manufacturer. We've seen many stories of other manufacturers having to shut down production lines. On the bright side, FSD subscription finally came to the masses. Though city street driving is not yet available, there are still many features that folks may enjoy that could drive some adoption of the subscription. However, we got some very interesting Model Y news to cap the intro for the Model Ys being produced out of Giga Texas and Giga Berlin.
So let's see, the Model Ys in Texas and made in Texas and Berlin will look very much like the Model Ys we currently make, but there are substantial improvements in the difficulty of manufacturing. So for example, the Model Y made here and in Berlin will have a cast front body and a cast rear body, whereas the one in California has a cast rear body but not a cast front body. We're also aiming to do a structural pack with 4680s cells, which is a mass reduction and a cost reduction. But we're not counting on that as the only way to make things work. We have sort of a backup plan with a non-structural pack and 2170s essentially. So, but at scale production, we obviously want to be using 4680s and structural pack. From a physics standpoint, this is the best architecture, and from an economic standpoint, it is the lowest cost way to go. So the lightest, lowest cost. But there's a lot of new technology there, so it is difficult to predict with precision when does it work and when do you reach scale production.
So as we've already discussed, we knew that 4680 and structural pack were coming, but the single cast front and single cast rear is news. The question then is that once the Giga Texas and Giga Berlin Model Y lines come online, what happens at Fremont? Many ways we could go there. The Y line could be repurposed entirely to Model 3 production, it could be reworked to support the new production process and just keep on going, or the most unlikely, just keep rolling along. I say the last is most unlikely just because Tesla would then knowingly be putting out an inferior product at the same time it's producing a superior one, and customers have no way to select the better product, which is the same price as the lesser one. Seems super unfair, and something I think there's no way in the world will happen. With the intro out of the way, we get to the retail investor questions, which, since the inception of accepting them, have been the best questions we've got as far as getting more info on products or the future of the company. We start with Cybertruck progress for this go-around.
The Cybertruck is currently in its alpha stages. We finished the basic engineering architecture of the vehicle. With the Cybertruck, we're redefining how the vehicle is being made. As Elon said, it carries much of the structural pack and large casting designs of the Model Y being built in Berlin and Austin. Obviously, those take priority over the Cybertruck, but we are moving into the beta phases of Cybertruck later this year, and we'll be looking to ramp that in production in Giga, Texas after Model Y is up and going.
Not much new here, other than they've confirmed the alpha stage of the design and production is complete. However, obviously the one big thing is that it's essentially confirmed you're not going to see any Cybertruck production this year in any volume at all. The clear theme throughout the call was ramp up of Model Y in Texas first, then Cybertruck production. So, sorry Cybertruck reservation holders, you've got a bit more time to wait. Our next topic is a hot one among many fans. With the rise of this chip shortage, many have said Tesla vertically integrates a lot of things. Why not fab your own chips too? Elon addresses this after talking about some parts delays the company suffered.
In order for Cybertruck and Semi to scale to volume that's meaningful for customer deliveries, we've got to solve the chip shortage, or working with our suppliers. People sometimes say, "Why don't you just build a chip fab?" Okay, that would take us, even moving like lightning, 12 to 18 months. So it's not like you can just whip up a chip fab. It's just like, let's just make a quick chip fab.
I'm very surprised Elon didn't just outright dismiss it. There are so many reasons this is a terrible idea, not limited to the fact that 1, it's a global chip shortage, meaning there are many chips that could be an issue. Tesla can't possibly fab every single chip they need in-house, because 2, there is no economy of scale. Yes, Tesla will eventually produce 1 million cars a year and more, but Tesla's partners produce literally every chip to every other manufacturer in some way, and the per unit cost for Tesla would be nowhere near economical compared to that. And then multiply that times each line of chips they decide to produce via the Leroy Jenkins approach. Lastly, 3, Tesla has literally never fabbed a chip in its existence, something which is a hard process even for seasoned companies to get good yield out of. So this would further torpedo the per unit cost of making their own chips. Yes, the shortage sucks. No, Tesla making their own is not a good solution. Moving on, Elon talks about cell capacity. This is about to get rather interesting between the multiple cell sizes and applications of those cells. It's no secret that Tesla is cell constrained, despite having the best volume cell production in the world. Let that one sink in a bit for the Tesla detractors out there. Due to this, as we've been hearing, Powerwall, Powerpack, and Megapack all suffer enormous lead times. You think getting a car is taking a long time? Just look at the lead times on the energy storage side. Megapack, I believe, is booked out until the end of 2022. However, there's a very interesting shell game the company can play depending on the situation, and Elon details it here.
What we're thinking of doing is depending on, it's basically overshooting on cell supply for vehicles, and then as we have, say, excess cell supply in 1 month or another, then routing that cell output to the Megapack and Powerwall. Or by the same token, if we're prioritizing vehicle production, if there's a shortage of cell output for some reason, then we will throttle down Megapack and Powerwall production. So that something's got to give, basically.
Or if there's a disruption to vehicle production,
yes,
we have an outlet for the cell capacity.
Yes, exactly. There's a tremendous amount of inertia in the supply chain. So if we say to a supplier, we want you to double cell output, well, even doing that in a year is very difficult. And then that system has a tremendous amount of momentum. It is like a flotilla of supertankers. It's insane.
Speaking of which, from a raw materials perspective, we also have long-term contracts to secure our supply chain to also enable this growth. So we're not just looking at the suppliers, but upstream from there.
Yeah.
Which is more flotillas.
Yeah.
This is a great approach, and one very unique to Tesla. Right now, none of the other vehicle manufacturers have a real energy storage side to their business. Tesla has the extreme luxury that if for some reason vehicle production slows or stalls, they can pre-make a pile of cells to keep their logistics pipelines full and ready for when the issue is resolved, and then continue producing cells to catch the energy storage side back up, or vice versa. If there's an issue on the energy storage side, more vehicle cells suddenly become available. It's a nifty little slider that Tesla can manipulate as needed to optimize cell production and continue cranking cells out as quickly as possible and never have to stop. In short, the Tesla cell production lines should always be fully utilized, barring, to borrow an Elon term, some huge force majeure event that would take down both the vehicle and storage production lines simultaneously. Frankly, this would have to be a world-affecting event, given Tesla's imminent global production status when Giga Berlin comes online. While this isn't impossible, I see you out there still, pandemic, Tesla is as insulated as any company can be against it. If Tesla is having issues, you can bet your next paycheck that everyone else is too. Next up is the long-expected opening of the Supercharger network to non-Tesla vehicles. Elon talks about the logistics behind this and what it means to Tesla owners.
Yeah, we're currently thinking it's a real simple thing where you just download the Tesla app and you go to a Supercharger and you just indicate which stall you're in. So you plug in your car, even if it's not a Tesla, and then you just access the app and say, turn on the stall that I'm in for how much electricity. And this should basically work with, I think, almost any manufacturer's cars. There will be a time constraint. So if the charge rate is super slow, then somebody will be charged more because the biggest constraint at the Superchargers is time. How occupied is the stall. And we'll also be smarter with how we charge for electricity at the Superchargers. So, rush hour charging will be more expensive than off-hours charging because there are times when the Superchargers are empty and times when they're jam-packed. And so it makes sense to have some time-based discrimination on it.
Yeah, we've been doing that, and it's been working, and people respond, and it helps with utilization.
Yeah, exactly. So, I think we're in Europe and China and most parts of the world, it's the same connector for everyone. So this is a fairly easy thing to do. Developed our own connector, which, in my opinion, is actually developed supercharging. Tesla was the only one who had high-power charging, and there was no standard. So we developed our own connector, which, in my opinion, is actually the best connector. It's small and light and looks good. So an adapter is needed to work for EVs in North America, but people can buy this adapter, and we anticipate having it available at the Superchargers as well, if people don't sort of steal them or something.
We have a good solution for that.
Okay. That is just that's a constraint on the North American thing.
Yeah.
That's basically a vestige of history. But I think we do want to emphasize that it is our goal is to support the advent of sustainable energy. It is not to create a walled garden and use that to bludgeon our competitors, which is sometimes used by some companies.
I think it's also important to comment that increasing the utilization of the network actually reduces our costs, which allows us to lower charging prices for all customers, makes the network more profitable, allows us to grow the network faster. So it's a good thing there. And no matter what, we're going to continue to aggressively expand the network capacity, increasing charging speeds, improving the trip planning tools to protect against site congestion using dynamic pricing, as Elon mentioned.
Yeah.
And just continue to focus on minimum wait time for all customers.
Yeah, obviously, in order for this for the Supercharger to be useful to other car companies' cars, we need to grow the network faster than we're growing vehicle output, which is not easy. We're growing vehicle output at a hell of a rate. So Superchargers need to grow faster than vehicle output. So this is a lot of work for the Supercharger team.
Lot to unpack there. First and foremost, they say they'll keep adapters at the Superchargers and then joke about them not getting stolen and that they have a good solution to prevent that. I cannot wait to see exactly what that is, because where there's a will, there's a way. While I doubt that most EV owners would steal one of these, because let's be real, if you own an EV, you had to have the cash to buy that EV, and most folks, though not all, with that kind of cash aren't sweating buying an adapter if they need one. I'd be more worried about random vandals and folks with an axe to grind with EVs in general coming along and either destroying or swiping them. Suffice to say, if you own a non-Tesla EV and want to use the Supercharger network, I'd buy one of these adapters to keep in the trunk. The other bit of this that's interesting is that essentially Tesla wants the network to be used to its fullest. This is a situation where what's best for Tesla isn't necessarily what's best for us. The more the network is used, the less Tesla needs to charge to ensure that it covers costs to operate the network. Of course, that means that fewer stalls are available for us as owners as well. The last thing I wanted to touch on was this time-based charging. This is one I'd love to have pressed Elon on. They're saying that what we'll call rush hour pricing has been deterring owners from charging during peak times. The problem is, peak times are peak times for a reason. People need to charge when they need to charge. There's no putting this off, especially if you're on a road trip. You're at the mercy of when you left and when you happen to arrive at a station. To me, this just seems like gouging the customer and not really solving anything. I'd love to see the data behind this supporting their assertion that this helps congestion. We then moved on to one of the keystones of the company, and that's 4680 development. Apparently, Elon had mentioned at some point that the cells were not reliable enough to be in vehicles, which I'd not caught that reference before. The whole of Battery Day was about the cells being installed in vehicles, so I don't know why he'd have said that, unless the questioner just found something way out of context. At any rate, Elon squashes that and gives us an update.
We'll definitely make the 4680 reliable enough for vehicles, and we, I think, are at the point where in limited volume it is reliable enough for vehicles.
Yes.
Again, going back to limited production is easy, or prototype production is easy, but high volume production is hard. There are a number of challenges in transitioning from sort of small scale production to a large volume production. Not to get too much into the weeds of things, but right now we have a challenge with basically what's called calendaring, or basically squashing the cathode material to a particular height. So it just goes through these rollers and gets squashed like pizza dough, basically, but very hard pizza dough, and it's denting the calendar rolls. This is not something that happened when the calendar rolls were smaller, but it is happening when the calendar rolls are bigger. So just we're like, okay, weren't expecting that.
Yeah. It's not a science problem. It's an engineering problem. It's not a question of if, it's a question of when, and the team is 100% focused on resolving these limiting processes as quickly as possible.
Exactly.
And on the reliability side, as Elon mentioned, we have successfully validated performance and the lifetime durability of the 4680 cells produced with Kato. And we're continuing ongoing verification of that reliability. We're actually accruing over 1 million equivalent miles on our cells that we produce every month in our testing activities. As the focus on that is very clear. We want high quality cells for all of our customers. We're just focused on the unlucky limiting steps in the facility, and with the engineers focused on those few steps remaining, we're going to break through as fast as possible.
Very neat to hear exactly one of the big challenges they're facing in scaling production, and that they completely believe this to be an engineering issue, and that will absolutely be resolved. They're in the final refinement phase of the process, and it sounds like we should be pretty confident that production cells will be ready before the year is out, as has been previously stated. Lastly, the saddest of news came for these calls going forward. I'll let Elon explain without further ado.
I think also, this is the, I wouldn't say the last time I'll do earnings calls, but this is I will no longer be default to doing earnings calls. Obviously I'll do the annual shareholder meeting, but I think going forward, I will most likely not be on earnings calls unless there's something really important that I need to say.
Well, these calls just got a lot less interesting going forward, to the point that they may not get this type of coverage, actually. I'll play it by ear, but Elon is the straw that stirs the drink on these calls and is usually the source of any really interesting news. While this is sad, it's actually a great indicator for the company that he no longer feels the need to attend. He's got a crew around him that he's clearly confident enough in to handle this responsibility, and frankly, probably keeps more stuff under wraps that they'd rather not talk about as soon as they have in some instances. Elon leaves the door open for a return, though, saying if there's something important enough to talk about that he'll show up, which to me will obviously be a go-forward indicator of important news on these calls. That will do it for this week's show. As always, I really hope you've enjoyed this, as these are a lot of work to put together, but I think it is worth the effort. Hopefully, as we've already talked about, we'll get to keep doing it, but we will see. Thanks to all my patrons supporting the show at patreon.com/Tesla Tidbits, and as always, I have a special shout out to all the super patrons supporting the show at the $10 plus level. There are Ryan Scarborough, Lee Sweet, Dorian Steve Guberman, Rolf and Cheryl Waterhouse, Todd Sullivan, Zortec LED Canada, Ricky Johnston, Nathan Garza, Ed Patterman, Sunil Joseph, and Brad Lettner. If you have feedback for me, the best way to be heard is to tweet at Tesla Tidbits and use the hashtag AskTeslaTidbits if you'd like your question to be considered for the show. Until next week, keep it charged and hit the road.